Taxes, one of life's only certainties. They're the engine behind everything from roads to research, quietly shaping our world. But tax is just a catch-all for a maze of ways governments collect money, on what you earn, spend, save, and even inherit. Today, we're breaking down every major type of tax, fast, clear, and with zero math homework. Let's go. At its core, a tax is a mandatory payment that citizens and businesses make to their government. These payments are essential for funding public goods and services, things like national defense, clean water systems, and public schools that benefit everyone, not just individuals. Taxes are the invisible threads that hold our society together, making it possible for communities to thrive and for basic needs to be met, regardless of personal wealth or background. Taxes are the price we pay for a functioning society, pooling our resources to build and maintain things we could never provide on our own. From safe roads and bridges to public parks and emergency services, taxes make collective progress possible. But it's not just one tax. Governments use a whole toolkit of taxes to raise the money they need. Each type of tax targets different activities or assets, and together, they help fund everything from healthcare to scientific research. There are income taxes on what you earn, sales taxes on what you buy, property taxes on what you own, capital gains taxes on your investments, and many more. Each one plays a unique role in shaping how money flows through our economy. Some taxes are progressive, meaning they ask more from those who have more, like higher income brackets paying a larger percentage. Others are regressive, taking a bigger bite out of lower incomes, which can make life harder for those already struggling. The way each tax is structured, and the impact it has, shapes not just our economy, but also our politics and social priorities. Debates over taxes are really debates about what kind of society we want to build together. Understanding these differences is key to being an informed citizen. When you know how taxes work, you can better participate in conversations about fairness, government spending, and the future of your community. So let's start with the big one, income tax, and see how it affects all of us. When most people hear the word tax, income tax is usually the first thing that comes to mind. It's a familiar part of adult life, something nearly everyone encounters, whether you're just starting your first job or running your own business. Income tax is a direct tax on the money you earn, your salary, hourly wages, or profits from your own business. Every payday, a portion of your earnings is set aside for taxes before you even see your check. Most countries use a progressive system, which means the more you earn, the higher your tax rate, but only for the income that falls within each bracket. For example, if you move into a higher bracket, only the money above that threshold is taxed at the new rate, not your entire income. Fortunately, there are ways to reduce your tax bill. Deductions and credits can make a big difference. Think about student loan interest, charitable donations, or child tax credits. These can lower the amount of income that's actually taxed or even give you money back. These incentives aren't just about saving money. They're designed to encourage certain behaviors like buying a home, saving for retirement, or investing in renewable energy. The government uses the tax code to nudge people toward choices that benefit society as a whole. Income tax is the backbone of government budgets, funding everything from schools and roads to healthcare and national defense. But the rules are complex, and that complexity leads to constant debate about what's fair, who pays the most, and how the system could be improved. Is the system too complicated? Does it favor some people over others? Is it too easy for the wealthy to find loopholes? These questions keep income tax in the news and at the center of political debates year after year. So the next time you look at your paycheck and see those deductions, remember, income tax is just one piece of the puzzle. Let's explore what else comes out of your earnings. Payroll taxes fund social insurance, mainly Social Security and Medicare in the U.S. Both you and your employer pay in, making it a shared burden. Payroll taxes are usually flat rate, but Social Security only applies up to a certain income cap. This makes them regressive lower earners pay a bigger share of their income. These taxes are crucial for the social safety net, but debates rage over their sustainability as populations age. Should we raise rates, lift the cap, or change benefits? The future of these programs depends on it. Sales tax is a type of consumption tax that you encounter almost every time you make a purchase, whether it's a cup of coffee or a new pair of shoes. Unlike income tax, which is based on what you earn, sales tax is triggered only when you spend money on goods or services. It's added right at the checkout counter, and the amount you pay depends on where you are. In the United States, Each state, and sometimes even each city, can set its own sales tax rate, leading to a patchwork of rules and percentages. Internationally, the rules can be even more varied, with some countries charging higher rates or taxing different items. To help make things fairer, many places exempt basic necessities like groceries, prescription medicines, or children's clothing from sales tax. This is designed to reduce the impact on families and individuals who spend a larger share of their income on essentials. Still, sales taxes are considered regressive. That means everyone pays the same rate, but for people with lower incomes, the tax takes up a bigger portion of their budget, making everyday purchases feel more expensive. In many other countries, instead of sales tax, there's VAT or value-added tax. VAT is collected at every step of the production and distribution process, from raw materials to the final sale. Each business pays tax only on the value it adds, and the final price you see on the shelf already includes all the VAT that's been paid along the way. VAT is often praised for being efficient and difficult to avoid, since it's built into the supply chain. However, both sales tax and VAT are hot topics for debate, with people arguing about which system is fairer or more effective at funding public services. Whether it's sales tax or VAT, these taxes are crucial sources of government revenue. They fund everything from schools and roads to healthcare, but they're also a constant source of political controversy and public debate. Now that we've covered taxes on what you buy, let's move on to taxes related to what you own. Property tax is a yearly charge on real estate, your home, land, or business property. It funds local services, schools, police, parks, and more. Wealthier areas with higher property values collect more, often leading to better services, and bigger gaps between communities. Assessors set your property's value, and local rates determine your bill. Even renters pay indirectly, since landlords pass the cost along. Property tax shapes neighborhoods and opportunities, making it a key player in local inequality. Capital gains. Tax hits the profit from selling assets, stocks, real estate, art, at more than you paid. Short-term gains, assets held a year or less, are taxed like regular income. Long-term gains get lower rates to encourage investment. This system helps build wealth, but most investment income goes to the wealthy, fueling debates about fairness. Supporters say lower rates boost economic growth. Critics argue it widens inequality. The capital gains tax sits at the crossroads of growth and fairness. Now, what about taxing businesses themselves? Corporate tax is a direct tax on company profits, revenue minus costs. Corporations benefit from public infrastructure and services, so they pay in too. But global competition leads countries to lower rates, sparking a race to the bottom. Companies use loopholes and profit shifting to minimize taxes, sometimes paying little or nothing. The debate: should rates be higher? Loopholes closed? How do we keep companies from hiding profits offshore? Corporate tax is a battleground for economic fairness and national competitiveness. Excise taxes target specific goods: gasoline, tobacco, alcohol, even sugary drinks. Sin taxes aim to discourage unhealthy or harmful behavior while raising revenue. They can improve public health but are regressive, hitting lower-income groups hardest. Critics question if it's government's job to nudge our choices. Supporters point to reduced smoking and healthier outcomes. Excise taxes are about shaping behavior as much as raising money. Tariffs are taxes on imports, collected at the border. Once a main revenue source, today they're mostly used to protect domestic industries or as leverage in trade disputes. Tariffs can raise prices for consumers and spark trade wars, disrupting economies. They're a balancing act: protect local jobs or keep goods affordable. The debate over tariffs is about national interest versus global cooperation. Now let's talk about taxes on inheritance. Estate and inheritance taxes apply when wealth is passed on after death. The goal: limit dynastic wealth and promote fairness, but critics call it double taxation and say it hurts family businesses. In reality, only the wealthiest estates pay. Most people are never affected. Still, it's a lightning rod in debates about wealth, opportunity, and what one generation owes the next. Now for some of the stranger taxes out there. Beyond the basics, there's a world of odd taxes, like the gift tax, which prevents dodging estate tax by giving away wealth. Wealth taxes, though rare, target total net worth and spark fierce debate over feasibility and fairness. History is full of bizarre taxes. England's window tax, Russia's beard tax, France's playing card tax, even Rome's urine tax. If something has value, someone's tried to tax it. These oddities show how creative and sometimes absurd taxation can get, but the real action is in how people respond to taxes. Tax avoidance is legal, using deductions and credits to lower your bill. Tax evasion is illegal, hiding income or lying to dodge taxes. The line can blur, but one plays by the rules, the other breaks them. Authorities spend huge resources chasing evasion, while avoidance fuels endless legal battles. Understanding the difference is crucial for both ethics and the law. Now, why does all this matter? Taxes fund every public service: roads, schools, safety nets, and more. Debates over taxes are really debates about what kind of society we want and how we'll pay for it. The details, who pays, how much, and for what, shape our politics and our lives. Being informed lets you see past the rhetoric and join the real conversation. Understanding taxes is essential for engaged citizenship. It's how we decide what kind of world we build together. That's the world of taxes: income, payroll, sales, property, capital gains, corporate excise, tariffs, estate, and even the weird ones. Each shapes our society in profound ways, for better or worse. The goal isn't to love taxes, but to understand them, and use that knowledge to hold leaders accountable. Your voice matters most when it's informed. Stay curious, keep asking questions, and pay attention to where the money goes. If you learned something, like and subscribe for more quick explainers, and tell us, which tax do you think is the most unfair? Until next time, stay informed and keep your beard tax-free.